Good afternoon, Scott Redler T3 Live. Welcome to today's recap. Today is Tuesday. We just had pretty much a reversal of what we saw on Monday. Now here's the thing, guys. Nobody knew what was going to happen today. What did you know from yesterday? You had an engulfing, bearish down bar that sliced through the 8-day, sliced through the 21-day, engulfed pretty much all of 2014. So if that got you out of some of your longs, because that's part of your process, fine. Even if you came in today with a little short in the brain. I came in today net short the spiders. In my head, which we posted also charts, I said, if the bears have any power, they will stop or they will pose a threat to some of the bulls at certain levels. Okay, one of them being, off the bat, 1823, the other one being 1832. Those were my thoughts. If the bulls or the bears retain the bounce and it rolls over, we can get an H pattern. And then finally, every single top caller in the world might say, oh, they're right now. Meanwhile, they lost a lot of money not involved in the bull market for the last 2 years. Who cares? But anyway, if you're trading for alpha and P&L and you said, I think we're going to follow through to yesterday's move, which is something that I thought as well, okay? Once the day started developing, you had to be flexible. You had to say, oh, we just took back resistance 1. Oh, we just put in a 30-minute, pivot. I could use that now. And then once it, took back that, the 8-day and the line in the sand, half of yesterday, right there, you had to say, okay, let me be done being short. I'm not just going to roll it up like I've done so many other times, not being opinionated, not calling a top like a lot of people do out there. Let me get out of my shorts and see what's acting well, switch some gears, and start putting on some longs that look like they showed relative strength, still have good patterns, and could potentially make you money. So if you go to the chart of the SPX or the spiders, well, let's just go to the SPX, you will see, let's take a close-up look here. This is what we saw yesterday. We saw a wide range bar slicing through the 8, slicing through the 21-day, coming into the trend line. And then what did we see today? We took back the 8, we took back the 21-day, and there was out of performance in stocks. I just want to show you something that I put on there today because, if you remember right here, okay, this bar, let's just show this to make it look relative, okay? This was the bar that took place after a multi-day move from the Red Dog reversal back in October. Everyone in the world thought, you know what, this is it. Probably including me. I probably got out of my longs that I was hopefully trailing for the majority of this move. If you remember this technical pattern, here was your reversal, here was your engulfing bar, here's when it hovered above the prior descending trend line, and that's when it started to go and continue. So right here, you didn't know what was going to happen, except for if you wanted to get out of some longs after a big move, okay. The next day, most people had short in the brain. But what happened? Boom. Okay, I remember it opened kind of flattish and just grinded all day long. So you could have done two things. You could have also said, we didn't hold the bottom third, we didn't hold half, we didn't, stop at the trend line. Let me get out of some of my shorts instead of rolling it up and look for some longs. And then what you also saw a few days thereafter, this bar held the top third. Held the top third, showing commitment to this, okay, because you didn't see commitment to the down move. Otherwise, you would have spun down here. And then we wound up breaking out. And if you wound up, rolling your shorts up here, staying involved there, you then were short for another nice big move to the upside. Instead of saying, okay, let me get neutral, let me see what's acting best right here, put some longs on for a potential move that wound up, going into the end of the year. So with that being said, I'd like to show you some things in the past so you could look at things in the future. So right here, it just engulfed this day, and now you have a trend line right here. Okay, so if you didn't cover, you have some decisions to make. Okay, hopefully we get an inside day or so up here, a little bit more clarity before maybe breaking out. But we closed at 1837. If you want to take a quick look, I just want to show you the 5-minute chart, just to show you how just how my thought process works. Because again, I'm not the smartest guy out there. I'm not someone who claims to be like I know everything, but I have my levels. Okay, and this was your gap up. I came in short and I shorted this gap up also. Okay, came in, covered a little bit, to get myself back to a reasonable amount of shorts, came back up, and I said, oh, we just didn't fill the gap. There's some strength here. And I think I tweeted and said, you know what? The first 30-minute high is 182.56. We break above there. Well, in my head, I'm out. Okay, so I covered around here, and this, I lost short to spiders. Big friggin' deal. I was done with that thought process by 11 o'clock. Okay, and then the other level was really right around here, which it popped through. Okay, so it squeezed some people through that level, which was at 182.90 or 183-ish. And then I actually, on this move, I said, you know what? I'm long a few things, but let me just, hedge it. I'll put on a short versus the high here, that high being 183.27, and got stopped out of it again for a little bit of a loss because at least my risk was defined. Again, I didn't short here, short here, short here, short here, short here, and avoid all longs and say now I got to deal with it. As the spiders wound up going all the way up towards the highs. I said, let me measure the bounce so you know what it means here on this daily bar. Okay, and then you want to put 1 plus 1 together. You look at the Qs. Qs not only took back both the levels that we put in the morning note, the halfway point, it then closed above yesterday's highs. Okay, so that showed you appetite for risk. That showed you strength. That showed you look for longs versus just getting short in the brain. That's what's been working for the majority of the last 2 years. And then you go to the bios that did give you a negative day yesterday, a very strong engulfing bar. Okay, but then what happened? It engulfed it. Okay, it didn't control. It didn't hover here. Okay, if the bears wanted to stay in control, okay, they should have kept the bios pretty much in here. Okay, or not even taking back yesterday's highs. Instead, it rolled right through, showing appetite for risk, saying you better cover some shorts in the bios. Okay, and with that being said, between the Qs going or technology, if you come back to me going near the highs, and the bios, which is the appetite for risk, hopefully again you start looking around for longs, and there was quite a few of them. Okay, Google best in breed. Hopefully whoever's been bearish on that and keeps talking about it on CNBC, I'm not going to name names, isn't a trader because she probably is put out of business. Instead, she's just probably running out of ink. Anyway, held the 8-day the majority of the time. This trend intact, at highs here, best in breed. Unfortunately, I haven't been going with this one. As of late, I take my turns where I put my emphasis, but hopefully, you've been involved and you're not just short in the brain, or at least want to start going until you're covered, and because this one looks like it's ready for highs. Amazon, I would say nothing too, great to report here, except for holding some support. This is choppy. I try and avoid this anyway because it's hard. It still looks decent. Apple was a nice surprise. Apple tried to show some relative strength. We've been talking about Apple the past 2 days, and I think some people have had some success with it. Here is your double bottom. Here you go with this trend that's been intact in Apple. Okay, went a little bit below it right there, but then the last 2 sessions it showed some relative strength. Okay, yesterday was one of the last stocks to go negative, and then today it cleared a spot that we were talking about. It cleared the previous day's high of 542, so that means Apple is above the prior day high. The S&P is not, but the Qs are, so it's in line. It took back some moving averages, and now we'll see what's next. Closing the highs, didn't sell off in the close, so I'm hoping it continues. As far as some other stocks, Facebook, okay, this has been a great stock. I know I talked about how it came back in, to what's it called, below the 8-day. And then today, you know what? I started to short this. This was one of my ideas. Okay, I said to myself, here, come back to me. Facebook broke the upper level. If we're going to get downside follow through this one, everyone's saying it's a double top. Maybe I could look to get short, but I'm going to do it with the plan. So the first few minutes, it put in like a 10-minute high, and I said, I will short versus that high. If it breaks above it, I'm done with it. I'm not a Facebook bear, I'm a trader. And this stock's been strong. This stock tried to break out, but came in at the end of the day with the market just like everything else. So let me just give it a chance. So you go back to Facebook, and you will see in the first 5 minutes of the day, which is right here, okay, stock gapped up, and the high here was right around this 56.50, so gapped up, came in, shorted a little bit more, pushed through, didn't cover, because it was so early, came back down, and then right here, I'm like, you know what? This thing gets back above 156.60-ish. I'm done with it, and what I should have flipped long, but I didn't. I just got out of the way because I wasn't thinking so long yet. But I didn't fight it the whole way up like a lot of people did all day long. I said, let me see if it fills the gap. Look where it came from yesterday. Okay, let's measure, the strength of the bears being from where it was here 58 all the way down to there. This would have been a third, or this would have been the line in the sand. 57 is really the spot which you could have given it to, because that's where it broke down from. Once it got above there, if you didn't, cover in a micro scalp like I did at 56.50-ish, you could have covered right there, and there you go into the close. And now you go back to the daily chart, which usually rules. Okay, first of all, it's been an unbelievable stock since 2 quarters ago, and then it's been back on track since this red dog reversal right there. Here is when it broke this downtrend and went back up, and now here you go, looking as if the daily pattern setting up for another move to highs. Okay, and then guess what woke up today, ladies and gentlemen? A stock that I haven't touched since 150.40. If you know our community, you know Tesla, that's when Tesla started to just fade. We tried playing it for a long, it was a decent trade up to 156. It started to fade 150.40, got stopped out. Haven't visited since. This morning though, I got to give it to Sperling. He was on top of his game. It was down $1.50 or so. He's like, there could be a red dog reversal here. Guys were talking about it on the VTF, and I still was trying to navigate, get away from short in the brain, get myself back on track. And then right when the Tesla news came out, guys I know Tesla jumped on it. They were in it a little bit, they added to it, they saw it, boom, went up $8, $9. And I actually missed that. I missed the first part of it. I was like, oh, damn it. But then there was another move. You look at Tesla, you look at the action there. Just so you know, for the red dog reversal, you never really know what's going to happen. Okay, and what happened here is it broke below this low here, which was 137.82. So once it came back above it, okay, all there was a $1.20 risk. If you would have bought this, said, I'm just going to go, I just bought it right there, I'm going to put a stop in, I'm going to go to the gym, I'm going to go to work, I'm going to go on a day trip to visit my kids, whatever. You came back at the end of the day, you didn't get stopped out, and you hit, I would say, a pretty nice day, or some would say a home run there. Because look at the size of this move. You never know what's going to happen, but if you bought here, your risk was defined and never visited that spot. And now it engulfed this entire area. So, now moving forward, we'll see. Some people would have taken it home, maybe get some follow through. If it opens down a little bit, we'll see if it's viable to go green. You want to look at the 5-minute chart, just in case you missed. Just in case you missed this wide range bar, and just in case you didn't buy at the red dog reversal. Okay, because I missed this. I started buying back in here. And it did come back a little bit too far for my taste, but stayed with it. Okay, this was your tail down here, so I think I got involved right around, I started buying it in here, sold some that said I'm going to stay with some, put my stop in at 142 because I was heading to the gym. It was already 12:30 and I was getting upset because I didn't go yet because this action happened. Came back from the gym because my stop was right there, and I was like, ooh, look at that. We're at 152-ish. I had my stop. I was like an investor, just like all you guys on the road. Said, buying it here versus there, and was able to sell some there, and then I sold some up at 155. Great move. Didn't have to watch every tick. I knew the strategy, and if you missed this first move, here was your buyable second one. And if you missed this, when it crossed back above 148, that was your spot. Stock closed, near 161. So we'll see what happens there tomorrow, but a really nice engulfing move. As far as the banks, you know what? JP Morgan was pretty solid, so was Wells Fargo. Both were out of play today. That's what it feels like what the banks do is they report, they get out of play, they frustrate anybody who's trying to tick trade them, and then in a few sessions they get up and start going again. If you look at JP Morgan now, you will see did not close great, but it's still above this 57.50. So we'll see what happens there. Bank of America, which has earnings tomorrow, I had a little bit. It kind of engulfed that day. And I feel like just because it's in my thesis, I was long a little bit because I was like, should we take it into the earnings? I'm like, I usually don't. I took it last time. I'm like, but if you're going to be in this for the year, okay, which I think you could be, be in it for earnings. And since I think JP Morgan and Wells Fargo didn't do anything, it lowers the expectations for Bank of America, so we'll see. And, I want to be in this thing if it goes over 17. I'll be more upset if this was 17.30 without me than if I have to think about what to do tomorrow if it's a viable move down at 16.12. So that's why I took some. I did break my rule a little bit, taking a stock into earnings. I usually do options, especially in the high beta names, which I'll do later in the next week or so. So, there's not too much risk here in Bank of America. Plus, we've done so well with the stock. If I have to give a little back, I do. But if you're an investor and you're in it, I think it's fine. So I'm looking at CRM. Really nice trade. Talked about this on this day. Came in, closed strong. I think that looks good. VMW for my 2014 thesis. Woke up here. okay, the day that it was released. Then you had some time as it held the majority of this bar to then go again. That looks good. Microsoft actually reversed a little bit today. Nice engulfing day to take back the negativity from yesterday. Red Dog reversal here too, believe it or not. I did not touch it just because I was like, whatever. But went back above here, looks okay. A little stock woke up, I got to say, because people were talking about a Dang. Dang, which was an old school name, closed near the highs. And what I really liked about it, which is why it's one of the stocks I put on around here, is because of the volume. You look at the volume over the course of the past 2 days, heavy volume. Someone, I guess, thinks something's going right at this company, so I like the pattern. I went with it. This is kind of like a day one, so that looks okay. C-Trip, also at the end of the day, it seemed as if, I think there was a JP Morgan upgrade. People were talking about in the chat. Closed okay. See if that could continue. This is just a laggard catch-up play. And then you had the Ags. That was one of the things I actually went to. Okay, I went to POT, because it was clearing a level, and I've been watching it for a while, and that was something that put me back on track. I was like, oh, the Ags are strong. Let me buy at least some Ags with my Apple in order to get back in the game. And look at POT, looking good, could probably continue. Look at AGU, which is even cleaner. Okay, this is clearing a big level. Okay, look at the size of the level that this AGU is clearing. This is one heck of a base. So I know the Ags were out of play for most of 2013. Maybe they come back. And CF, which is from my 2014 thesis, because it is, the leader, is helping lead the way. And that was right around here when it came out. So we shall see. So with all that said, you didn't have to come in and be a genius today. You didn't have to nail it. All you had to do is be flexible. All you had to do is okay, you come in with short on the brain, what would negate that thinking? What levels, if the bulls take back, do you have to go neutral? And then what, after holding it for a little bit, would it take to get you in some positions all over again, especially if you got out of them yesterday because we broke below the 8 and 21 day, which is part of everyone's process, including mine. So with that said, we closed okay. We'll see how we open tomorrow. Everything that you see on my VTF, I'm in for a reason. You could see it in the disclosures at the bottom of the note. If you're not a member of the VTF, you're really missing out. You got guys conversing all day. You have everyone helping each other. The conviction was there, even with Tesla. Like the people on the chat had more conviction than I think I did. Obviously Sperling was in there and he was talking everyone through it. But I'm just saying, the idea flow is there. If you need some hand holding, these are real traders, real time. They're not, writing things down and inking it and time stamping it. They're trading for a living or trading to add cash flow to their lives, or trying to figure out how to make a career out of this because you actually can do it, and there are a lot of people that prove it here. So with that said, I hope you're not too frustrated today. You switch some gears. We'll see what happens if we could digest the next session or so and then figure out what comes next. Just be flexible and continue to think clearly, and you'll be able to navigate these markets. Have a great night.